Okay, good morning. Welcome everyone. I hope you're ready for some price action today. I think there's lots of opportunity in the stock market. We're going to get into the technical analysis of the charts. If you're new to the channel, I use technical analysis to really point out what I'm seeing in the charts, and I do try to give my opinion on where I think stocks and the market's going to go. I point out the levels, and I also talk about individual trade ideas that I'm taking personally. Everything in this channel is just my opinion. Nothing is trading advice or financial advice. So moving on. All right, guys. So here's how we're going to get into it. We'll start out with the IWM. We're starting to crack that trend line support. So look back here on the daily. Now again, the Fed reports today, I believe at 11 Pacific time, 2 o'clock Eastern time. So keep that in mind, all right? That's going to move markets. And on the IWM, you have this daily trend line right here. You held support here, held support here, held support through here, and then you broke, and it was a bear trap in the short term. We recovered all the way back up to this purple line, and then we're starting to crack again. So another break of this support line, I think, is likely going to do the trick to set this thing in motion to the downside. What do I like about this chart, and why do I think it's going to go lower? Negative divergence. See the negative divergence right there? See how you made a high right here, and the momentum was higher, and then the most recent high was a slightly higher price, but on less momentum right there on the RSI. So that means that this was a divergent high with low probability that it was going to continue to go higher. And so I'm looking for a trend reversal. That would come, a sell signal would come on a break of this trend line. We're starting to crack it now. The Fed might come out, and that might do the trick. All right, so we will wait and see what's going on there. I've started to kind of take a starting position just to front run the Fed a little bit. Now that's higher risk, so understand anything you do before the Fed reports is going to be higher risk. There's a higher chance of it being a false breakout or a false breakdown in this case. But everything in the chart's telling me that we're likely going to break and go lower. All right, so, and then again, this purple line right here, this is actually the first official tag of that purple line. We did not hit it here, and we just hit it the other day. What is that purple line? Well, if I go back to 2009, that is my 2009. That's the low of the Great Recession, and you can see we made this trend line, and we held support all through here. Had a little brief undercut right there, but again, there was no established trend really at that point. Once it recovered, it established a nice clean trend for many years. You can see all the weeks where it held support, held support, held support, right through there, held support. And in 2018, we broke our bullish trend. All right. Now, what have we done since then? Well, we broke, kind of chop sideways. Here's your COVID drop. And then this rally has come all the way up, and we tagged that trend line. All right. So if you look at the daily, there's the tag. And so far we're being rejected. Again, we got to, the Fed will the Fed should move markets, so we're going to have to watch that. But as of right now, looks like we just put in the high, for this, for the small caps. So I'm actually a little more interested in shorting the small caps right now than shorting tech. Tech's already had its first leg down, and small caps hasn't really sold off that much. So I suspect the small caps will outperform to the downside if we start to get more selling action. Okay, let's look at tech. So here's Qs, ran right up to resistance. I've had it marked out right there. Now I was thinking we were going to gap fill up here at 330. And that's completely still possible. We'll have to see how the market reacts after the Fed. If for some reason the Fed says something the market likes, then it's likely going to rally up and gap fill, all right, at 330.40. If it doesn't, you don't have to fill a gap right away. This gap might not be filled for, who knows? This gap might not be filled for 20 years. We don't know. I mean, if we're going to go into a bear market, maybe we don't see these highs in triple Qs for 20 years, or 10 years. Or who really knows? So you don't have, most gaps are filled, but doesn't mean they're filled right away. All right. So We rejected right there at 324.54, and we are, selling off. Obviously, the Fed is going to come out and let us know where this market's going to go next. You have this downtrend line right here that we started to break above, hit the first level of resistance. We're getting reaction. So again, I would look for a break back below this 311 area and start to break down here. You get the impulsive breakdown there, then that tells me then we're likely going to make another leg lower in the Qs, and we're going to make it, right now. And going to the daily, I would say that would give us a move down. Well, first we got to go. We'll go down to 297 area. That's where we bounced last time, so we're likely to head straight down to there. I suspect we'll get a small bounce, but it won't be nearly as large of a bounce that we just got. And I suspect eventually we'll break that to the downside, and we'll head down to about 285. All right, so keep an eye on that. 285 on the Qs comes back. That's the, let me go to the weekly. That's the, not the monthly, the weekly. That's the upper band of your upward price channel. So the Qs, this is going back to 2009, and you can see this price channel, the upper band right up there. We can, once we broke above, held it as support here, held it as support. So I'm looking at us coming back down to that, all right? And again, so I pointed out the levels to watch. On the hourly, you just watch for a break of that trend line right there. About 311, and you start to break down from there, and that's going to be likely going to be your sell signal for another leg lower in Qs. Okay, SPY. So SPY continues to get rejected at this blue line that I have here. This blue line is your bull market trend line that has, let me point it out here for anybody that's new. Here's your 2009 lows. And you can see on the weekly chart, we were walking up that trend, held support all through here back in 2016, held support there, all through here we held support. And then in 2018, when the Fed was hiking interest rates, they broke the bull support trend line. Ever since then, all the stimulus, all the times the Fed's been trying to save the market has really just been a topping pattern or a broadening wedge basically, but from below that bullish trend. So we broke. The Fed stepped in and pumped, and we got a back test of that trend line. Then we got COVID. The Fed stepped in again, and then we got another back test. And this is where we're trading at right now, right up there. So this is why I'm more interested in shorting the market up here versus just riding along, forever. I think there's a lot more opportunity to make money, just like there was a lot of opportunity. There's lots of opportunity in a bull market to make money going long. Lots of opportunity if there's in a potential start of a bear market to make money short. Now, why do I say bear market? Because that's what I think's coming. I think a bear market is coming next. I don't want to tell you, oh, we're in a bear market after we've sold off a bunch and say, hey guys, we're in a bear market. Let's try to find bear trades. That doesn't do anybody any good, all right? Rather, when you're in a bull market like this, you look for bullish trades. Once you break trend, you start looking for bearish trades at or near resistance or back tests. All right, because ideally, I want to be positioned for a bear market. We're way down here, I've been positioned the entire time, and then everyone says, "Hey, we're in a bear market. Everything's horrible." Well, we already knew that, and we'll be positioned for it. So that's what I'm trying to do with with everything I'm pointing out here. So on the SPY, going back to the hourly, we rejected the blue line here. We've got support right here, about 394-ish. Look for an impulsive breakdown of that. SPY didn't really sell off that impulsively when the Qs was selling off, so I would look for the SPY to start to sell off as well. One thing to watch to give you maybe a clue on if the SPY is going to break is the XLF. All right, so here's the XLF, and this is financials. You look at your hourly chart here. And this is the uptrend that the financials have been in for, really going back since February. Look for a break of that. And you can see we're just kind of walking up, but we're starting to break, all right? Before the Fed, we're starting to break. Now, again, it's before the Fed, so you want to take that with a grain of salt. But if this breaks after the Fed and it's, you get a close that's impulsive and a breakdown, then likely that means SPY is going to continue to sell off. Okay, another tell that helps is energy. Energy's been one of the high-flying sectors. I like energy long-term, but it's gotten way ahead of itself. Everybody's on the energy board. again, if you followed my channel and you go back and look at my videos back in, October and November of 2020, this is when I was talking about buying energy. I have it circled. I put out videos saying I like energy. Nobody liked energy back here. I liked it. We it had a massive rally. All right, I don't like energy anymore, at least not up here. All right, so I think energy needs to pull back, and here's the trend line. We've already broke, so you have a sell signal. It's before the Fed, but this thing's drifted a ways down. So we'll see what the Fed does. The Fed has maybe this thing just plunges, or maybe it does a kickback all the way back up to this trend line. It's hard to say, right? So as of right now, you do have the sell signal and on XLE, and it is continuing to kind of drift lower. So I've started a position in DRIP, DRIP, which is a 2 times leveraged ETF. Basically, when you go long DRIP, you're betting that oil is going to go down. That's what it is. I have longer term positions also in oil, so DRIP's kind of a hedge for me, but I've started that position, and I'll probably add to it if I see continued downward price action in oil. Where's XLE going down to? Well, on this one, I could see it coming all the way down to, well, you're probably going to at least get down to this 42 area. That's your former, that was a former kind of dual resistance area. Should be support now. And you've got some gaps. There's a gap right here, so we'll probably make a stop right there at 44.75. So we'll watch those levels. Here's gold, and gold's kind of just hanging in there. It's just kind of treading water, going sideways. Gold's likely going to move today, depending on what the Fed says, up or down. I'm not sure. The chart tells me that gold's likely going to go up, or at least the miners. Let's look at the miners here. The miners, look at what's going on with the miners. We'll start off with Barrick Gold here. You can see this morning we're starting to break bullish, and it's in the chart. It's priced into the chart that it's going to break bullish. You've got a bullish falling wedge in Barrick right there. That's been in play really for quite some time. We broke to the downside, so that was your fake out move or your bear trap. And because usually when you have a bullish pattern, if you break bearish, it's usually a very fleeting move that you'll see reversed, and that's what we saw. So we have a bullish pattern, which is a descending wedge, and then we broke bearish. When we broke bearish, we did put in some bullish divergence right there, basically, and it was just barely there. Some bullish divergence was right there, and I can show it on the daily. But then now we're breaking, to the upside, and we've already broken to the upside of the wedge, and we're not impulsively breaking out yet. So again, what's the Fed do? Do they just bring this back within the wedge, or does it spike and rip higher? The chart tells me, with all the bullish setup that we've had and everything, that we're gonna get a bullish break higher. All right. And so I see the miners pretty much across the board looking very good. This one looks a little weak. Anglo Gold Ashanti, for some reason, they're selling that one. That might be company related. Here's WPM hanging in there. Gap down this morning, and the buyer stepped right in. You see the wick. So everything, all the miners, sand starting to break out. Here's sand. You've got this downward channel right here. And you've got what you put in bullish divergence. See the bullish divergence, how the momentum just continued to kind of grind higher on the PPO and the RSI, and yet price continued to make new lower lows. That was divergent low price action, and now we're breaking to the upside of that channel. So that's a breakout. It's not super impulsive yet, but again, we'll wait and see what happens here after the Fed today. So far, that is a breakout. And so I'm seeing just bullish setups across all these miners. Here's Agnico Eagle, held that area down there. That's your bullish divergence. And we're, kind of just continuing to kind of grind higher. So everything's looking good on this front. Most of these are, doing well. Okay, so here's some stocks where there's very high potential for a lot of profit, and that's these high-flying these are a lot of the COVID stay-at-home stocks. They're kind of lumped into the technology sector. They get trashed. You know, a lot of them are just online based. They get trashed when tech falls. So we'll just look at a couple of these apps. All right, APPS. Couple things. All right, you have the March April 2020 lows, uptrend line here. So that's basically all of 2020. We broke. So there's your sell signal. That's a pretty good sell signal. That's an impulsive breakdown. It snapped back and did some back testing, but like I was pointing out, if I look at the hourly here, you can see I was like, it's not impulsive. It's just kind of hanging out there. It looks like it's just going to be a back test. So far, we've now failed, and we're back below that support line. So that's not good, all right? If the Fed comes out and rallies this, I think it's likely just going to rally right up to resistance and then get rejected right up there. So I don't see this recovering right now. If I look at the daily, look at the negative divergence that's in play. See the negative divergence, how the momentum's dropping off? So pretty much all of this is divergent highs, telling me that a trend change is likely. We got a sell signal, a back test, and now we're starting to roll. So I think this thing's good to roll over. We're probably at least going to hit the 200-day moving average, which is down here at about $40, and that's a drop of about 50% or so. Doesn't look like much, I know, because I use log scaling, right? If I didn't use log scaling and I roll it out, there's your 200-day way down here. All right, which means we're going to drop all the way down here potentially. So I think it'll probably come in at about 42.50 by the time it actually gets there. Yeah, so I think this thing's going to get halved. That's what it looks like to me. Okay, sorry about that. I had to take a quick call, so I'm not exactly sure where I left off. But the point is, apps, we'll watch this. You know, the Fed comes out. We'll see what they do. Are they going to kick it back for a back test? Are they going to recover the broken trend line? Or does this break down? This had negative divergence, so apps tells me that it's likely going to break down. And we have broken the trendline support. You know, there's your trendline support right there. There's your sell signal. There's your back test. And we've broken so far. So I would look for continued downside selling is what this chart tells me it's going to do. And where's the target on this one? Well, I think 42... about 42.50, right in that area, I think is the first level, the first major level of support. This was your first level of support, was right here about 65.36. We bounced off of that, but now if we head back down there, I think we break and head straight down to 42.50 level. Again, not straight down. It's going to work its way lower, but I think we get down there. And then probably tag the 200-day moving average, which is going to be down there as well. AMD still looks good. This has the potential for a big breakdown. So a couple things on this one. 2016. All right, this is going all the way back to 2016. There's your uptrend line. Lots of reactions on support. 1, 2, 3, 4, 5. 5 reactions on this trend line. And there's your sell signal, which is an impulsive breakdown of that trend line support. Came back and did a back test. Look at how they did that. They popped it above support, made it look all good, but then today gap down and back below resistance. So this is not a bear trap or a false breakdown. Usually what you'll see is it'll break down, and then when it finally recovers support, it's an impulsive rally upward because the shorts who took the short, who shorted on the breakdown are covering, and then longs are piling in. So you see that impulsive move higher once the bear trap is realized or people realize it was a bear trap. That's not what we have here. Here we have a breakdown, a back test. It recovered. It was not impulsive, and now we're back below resistance. So as far as I can tell, this one's going lower. Obviously, maybe off the Fed. I don't know, but this looks like it's going lower. And I think we're heading straight down to this level, 58.90, 59, we'll call it. That's your thin zone. There's a really thin zone of trading right here. So I think once we get down, basically we're going to run down to the next support, which is about 73, 72. And a break of that level, an impulsive breakdown, I think that sets us up straight down to 59. So if you wanted to wait, you could wait for an impulsive breakdown. Or obviously right in this area is objective to short too, because we're basically right at resistance. So yeah, I think this one heads lower. Negative divergence is in play. Big negative divergence. This is your divergent high right up in here. So all in all, looks good to the downside. And this is going to be a potential move of about, from where we're at now, 27%. All right, so I like that one. There's a trade idea. TAN here, you can see rejected at resistance right there, 97.80. That's your resistance level. We had a brief overshoot there, but still we held for the most part underneath, and we're gapping down and just kind of hanging out right now. The Fed's obviously going to move this one way or the other. So it's hard to know which way the Fed, after the Fed is going to report. These could rally up to resistance or they could drop. But even a rally up to resistance is just that. It's just hitting resistance. It's, as long as it doesn't break above and start to break resistance, then that's another objective area to add to a short. So as far as I can tell, this one's starting to downtrend lower. All right, we got an uptrend line here in TAN, broke trend right there. I talked about this one. I was watching this one for a while, and I don't think this move here is enough to satisfy the drop. I think we're heading down to, we haven't even tagged the 200-day moving average, so I think that's at least that's at least a probable stop, which is right now down around 73.50. Likely it'll be a little higher by the time we get down there, but a tag of that and potentially all the way down to this 58. All right, so as of right now, we have a break in trend. We're starting to reverse trend, making lower highs and lower lows. See their high here, lower high here. Here's their low and a lower low. So we're downtrending. All right. And I don't see any signs that this downtrend is over. You can see the negative divergence that was in play right there. I had it marked out. This was divergent high price action. We've sold off. And I don't see any change in trend of this downtrend. I don't see a change in trend. The thing is, a lot of people have a hard time really realizing you're in a downtrend because it's such a strong uptrend. They think that this just can't stop. They think this is a pullback. A lot of people that aren't charting, they think this is a buy the dip opportunity because they see it as just a pullback within an uptrend. When I see that this was your uptrend, the uptrend was broken, and now you're starting a downtrend. So I think we're likely heading lower, possibly all the way down to this 57.84 area as a potential target down there. Okay, that's all I got. So the Fed's coming out here in a few hours, and basically we're going to watch for what happens. If the Fed, just to recap, so everyone's kind of ready, if the Fed hints at buying the long end of the bond curve, 10-year treasuries and 30 years, and the long end of the curve, if they hint at maybe doing some sort of operation twist operation, which would be selling the short end of the curve and buying the long end. Basically, it's all about buying the 10-year treasury rate down, right? That's the interest rates that's rising. TLT's tracking that, and we can go to TLT just while I'm talking through this. You can see TLT's continuing to sell off. So interest rates are rising. They're rising quickly. If the Fed does not step in and does not do, a hint at a bond buying program, then look for tech to continue. I think the whole market's going to sell off, to be honest, if that happens. I think we'll get a broad-based sell-off, but especially tech, that's something to watch. If they do announce a bond buying program, then it's very possible the market will like that. The market will rally. And then in that scenario, gold should rally pretty strongly as well. So watch for that. If they don't announce a bond buying program and stocks continue to sell off, I'm not so sure gold's going to sell off. Gold's already seen a pretty good pullback. Gold's looking strong on my charts. We might get a brief sell off today, but I don't know if it's going to be a technical breakdown of the trend that I'm seeing. So that's really how I see it. And I don't know what the Fed's going to say, so that's why I don't know which way the markets are going to go. But those are the scenarios that I'm really looking at. So I'll be looking to play any way it goes. But if they do announce a bond buying program, look for the financials to break and to break hard. They should break to the downside and break hard. So watch XLF for a breakdown. That could be a potential play there on a break of this trend line. And that would likely come if they don't, if they say they're going to start buying the long end of the curve. I'm not so sure they're going to announce it. I think it's going to, highest probability, I would say, is the Fed just continues with what they've been saying, that they're okay with higher interest rates. They're not going to do a long buying program. They are going to just wait and see. They're going to keep the short end of the curve at zero basically, and that's it. I think they're going to just stick with what they've been going with, and the market, tech, and probably a broad-based market sell-off is going to happen. We're going to continue to sell off, and as we move lower, then the Fed will come out, maybe in their next meeting, maybe an emergency meeting, will come out and say that they're going to buy the long end of the curve. All right. I don't think it's going to happen in this meeting. I think the markets has a high probability of selling off after they say they're not going to do anything. Watch those interest rates. Watch TLT. If TLT impulsively sells off some more, it's going to get nasty, especially in tech and probably across the board in the market. So another way to play that is if you see a broad-based sell-off starting to happen, watch volatility. UVXY, VXX, some volatility plays. Those could possibly really spike higher, so that's another potential. And that's all I got, guys. So good luck, and if you guys want to learn how to use technical analysis to your advantage and kind of learn this skill set, it can help you for a lifetime, then take my course. Link is in the description below. It's not free, but it's 99 bucks, all right? I'm not charging an arm and a leg. I keep it very accessible for really everyone, and I just it's about 5 or 6 hours of training, and I feel like if that's it's basically less than minimum wage, so it's well worth it. The value's there for sure. That's why I don't give discounts on it, because I know the value's there. I'm never going to give a discount on that. I priced it so it's accessible to all, and it's a really good course. If you have comments or feedback about the course and you've taken it, leave that in the description below. I really would appreciate that. That does that helps me either adjust areas of the course that I maybe need to, or understand where I've done a good job, so that so others can see that as well. So that's all I got, guys. Thanks. Catch you on the next one.